Hello, everyone. Mike Arnold here, co-founder, Pet Trading Partners, along with Bob Iacchino, swimming in a sea of green. Look at all that green. Nobody here should be surprised about the rally. So, if you want to know more and you are new here, please do consider subscribing, ringing that bell, and hitting the like button. Longer term subscribers, come back, leave the comments after the live stream, and like the video. Sorry about the technical difficulties this morning. Hopefully it is sorted out. Another very strong day. Talk about another slow grind higher. ES weekly candle is a thing of beauty. We'll have to peek at that. Hey, welcome Wavy. Hey, Waka Waka. Bring back the dump. It was more exciting. You guys are just not. Rug pull Monday, not on Monday. Well, futures are open Monday. I'll go through that in a second. Don't be careful. Stocks are not open. Memorial Day here in the U.S. for everybody overseas that aren't in the U.S. We have a holiday, one of our few. Breaking all metrics up thanks to low vol, easily manipulated. Not everything's manipulated. These are the kind of rallies you get in bear markets. Remember, the S&P just tipped a bear market, and remember prior when NASDAQ tipped a bear market, and then you get the rip your face off rallies. And yes, the volume is low and there's very low depth, so things can get ramped up a lot. That's why you get these major rallies in bear market, especially exaggerated now because you also have negative gamma. Things are being discounted, like we had horrible Michigan's consumer sentiment, but the market's just shrugging that off because it's in rally mode. Cycles were at the bottom, turning up. We're also going in the end of month. Remember, end of month window dressing. It happens a lot at the end of month. You get especially in down markets, you get the ramp up at the end of month because you got to make your end of month numbers look good. So you dump more money in stuff, even if you're holding back some on cash. You dump it into at the end of the month, ramp up some stuff, then you pull it out the beginning of the next month. So you can do a lot of stuff, but is that manipulation? No, it's just the way it works. So don't get too conspiracy theory with this. Don't get it feels manipulated. They are doing this. Well, you know what? This is the kind of rallies you get. And here's your homework. Once a week during this bear market, go back to the 2000s, the early 2000s, and look at the NASDAQ when the dot-com bubble burst on a weekly and measure out to remind yourself what the size of those rallies were. Just to keep your mindset in. So when you get these rallies and go, how can this happen? We have PCE numbers. I mean, people were celebrating this morning that it was 4.9%. That is still brutal inflation. All right. But it's what Bob was talking about yesterday with the base effect. And now, from a technical perspective, you take out the numbers. We were oversold. Cycles were at the bottom. And it's just a matter of time before you get these rallies. By the way, if you want, we'll take a look. Sunday, I'll still be doing the live stream in the afternoon. Why? Because Sunday night, the future's still open at 5 p.m. Central. Whenever you want to know what's going on with the futures, you want to go to CME Group and go to their holiday schedules. And I would implore you to download this compact Excel one. So you go for Memorial Day. You just download that. And then that's going to give you this. So you can verify everything. So here's Friday, regular close at that time. Sunday, regular open for pretty much the stuff I really focus on. You see here, equity, cryptos, interest rates, FX, energy. All right, let me switch my camera over here since I'm looking over here. You have extended pre-opens for the grains and the stuff here. Dairy is extended pre-open. No, I don't know if anybody trades that here, but then lumber and livestock are closed. So they do not open on Sunday. They do not open on Monday. Now you have the overnight trading for Europe, Asia and Europe, and then it closes early, especially equities close at noon on Monday Central Time, 1 p.m. Eastern Time. Cryptos close at 4. And then everything reopens Monday night at 5. So it's, this gets a 5-hour closing window between when it stopped on Monday. Cryptos are just a 1 hour. Interest rates are they close at 12, they reopen at 5 p.m. You can see energy is at 1:30 and reopens at 5. So it's helpful to know this because we're still going to have trading going on. So that's what I would recommend people do. So there, I'm done. Hey, George, whatever it is, I'll take it. Hello, what a ripoff rally. Where do we go from here? Well, let's just look at the charts. Nothing goes in one direction. And we went down a lot for a while, and now we have a multi-day rally going up. We completed the first little double pattern on the NASDAQ, so that one's done. Now we've closed into the next double pattern. So can the rally continue? Even if we got a slight pullback, can it easily continue? Yes. If you're going with the stats and the probabilities, it favors a continued rally. Does it have to happen on Sunday night, Monday with the futures? No. Could it happen on Tuesday? I mean, what is today? What is today? It's the 27th, right? So we have 31st is Tuesday and June 1st is Wednesday. So can we easily see a rally up through June 1st? Yeah. Could we see a pullback? Yeah. But if we pulled back, it would then be for a continued rally. You talked about the weekly bars. There's the weekly bar right back to the weekly rotation zone. And look, even if you complete this whole double pattern, remember, you're into this clear path weekly move. Not a lot of stopping points. There's a minor one overhead, but you're then from this whole down move, the 50 to 62.5, this could easily roll up into there with the weekly rotation zone, completing the double before another rollover play. You gotta play the probabilities. So, and by the way, the first double target, as I said, this is something now I look to enter on pullbacks based off of Sunday night, Monday. Next target is right to the 50 exponential moving average, and that's the first target. So I'd be shocked if we didn't hit that. Be shocked. We're not going to review everything today. We'll do more in-depth on Sunday. Just wanted to keep this going for a point of completeness in case somebody can't join Sunday or was confused on what was going on with the trading hours. Hey, Amit, welcome. S&P double triggered like a college student. Oh, boy. Oh, what a great community we have here. Thank you, George. Amazing how sentiment changes in the same week, and that's what you get. Mike, do we have a small intraday double bottom on Tesla? I'll get to Tesla. Everyone for OK gets invested. Now, remember, long-term stuff still is in sell, so keep that in mind. At the end of the day, who cares why it's going up is going up, and you can make money riding longs or not. It's up to you. Exactly. And don't get into this analyzing the news, analyzing the headlines, analyze the patterns. And we had these patterns on. We've had these, so you just got to play the patterns. Let's see. But isn't it the point if liquidity being pumped in by Fed made stocks way overvalued, so 50% drop, stocks are still overvalued, especially where economy is going into correction? Stocks are still overvalued. We're still going to get another down leg unless the Fed just says, hey, well, we're stopping everything. But these are the kind of rallies you get. I'm going to do the exercise right now because, look, we're going to the Wayback Machine. All right? The way back machine. Here we go. Look at some of these. Have multi-week rallies in here. You still have multi-week rallies. Look. Top to bottom, 44%. I know some of you have sat through this with me, but it's good to remind yourself. Top to bottom, 31%. I mean, I should be saying bottom to top. Bottom to top, 52%. Bottom to top, 58%. Okay? Then you eventually got the bottom. So that's what I want you to think about. Don't get too, why can it, those rallies can go on a lot longer than you think. And so far it's one up week. The last little one in our, with the S&P was up 18% over 3 weeks. So far since last week's low, what are we up? We're up, 10, close to 11%. So if we finish the double, where does that take us in the NASDAQ? That takes us 18%. That's not even a huge rally, given the whole context. I was ultra bear, got squeezed hard yesterday. It's not worth being short with this thing's rally. No, and you wait for the topping patterns and you wait for the next rollover play, and there will be another rollover play. Dow, that's a bar. 6.44% up into the weekly rotation zone. We'll cover more of this, but into this key area. Look at that dead stop on the harmonic. Kaboom, right there. So we'll see how that continues. Crude even, it's getting up to my next target area up in here. And then I'll be watching next week to see if we get that close above 116.41. So watching for crude. And yeah, this is going to do. Gas prices aren't coming down anytime soon. The consumer, if you look here again from the numbers, where are my numbers? Well, they're not my numbers, but if you look here, personal spending is still up, mainly due to inflation. Personal income coming in less than forecast. So the and credit usage is going through the roof again. The consumer's gonna get tapped out really quick this time. But you can get the rallies. You can get the PEs going back to higher levels again. Gold moving on up almost to the harmonic, but that's had a nice rally. Watching for a pullback and then a continuation. We can go over that more on Sunday. Nice little inside pausing bar with the notes. With the separating rotation zones. So even if we get that pullback to about 120.07, still watching this pattern, should complete over the next few weeks. Dollar index, little pause day. Going to still watch for a rollover play in that. Your VIX coming back down to the pretty much retesting of May lows. So I'm definitely going to be paying attention to this if it starts breaking down below this 25 level, because we could easily return to this harmonic and then the 200 area with a continued rally before. Again, remember last time we got little bottoming patterns. That gave us the alert to start preparing for another sell-off. So not only can you get topping patterns in the futures or the stocks or the indices, you can get bottoming patterns in the VIX to alert us also. By the way, the Qs finished those doubles and triggered the next one. So does this have more area to run? Yeah, and I know some people should have made decent money on that. Tesla, again, completed the double pattern and running up to the other side of the daily rotation zone. Remember, back above the 62.5, so we should at least tap 760, 765.98, 766, and then possibly to 787. But also with Tesla, he could even theoretically run to about 800 again, easily, before another rollover play. So that was the little double there. This was the double. Amazon double likely to fill the gap. I mean, I really want people to trade the patterns and don't trade what you think. Will it fill the gap? I mean, we really need a super strong rally. That double's not yet triggered. right at that rotation zone. If you're going to play this, for educational purposes, when it's this close to that rotation zone, I don't need just need to close below the top here of 23.16. I want for a close above the rotation zone. It tests out slightly better. But yeah, then that could run it. Would that be for this gap play up here? I'd just be targeting again. It could return to the 50 declining, and on the weekly, see reconnect with the 200 week and the declining rotation zone. So yes, could this keep easily rallying if it does trigger that double over the next couple weeks? Yes, it could, just to return to the weekly rotation zone. Remember, this got majorly oversold. This was getting a nice bounce. Weekly cycles turning up with that double, so you could easily see some continued upward price action. A gap, I wouldn't be counting on this gap right here. With this pattern and where it is on the weekly, I'd be counting on some of these targets. Does it have to happen? No. It hasn't even triggered yet. But, you know, there we go. You want Netflix, Sashi? Oh boy, it's been one of those weeks. Getting that breakout move. You know, we still rally. I'm really paying attention to, because it's still on a continued rally. It's getting there slowly. But let me do the bigger harmonics right here for you. It's trying to put in a pretty decent bottoming pattern on Netflix. Now, is it a long-term one? Don't think so yet, but short-term, you know, you're starting to get this up to this key thing. So as long as you don't get a close back below about 177.50, I'd start targeting still this 204 level, and then above 204, that could be a great little level if you're playing. If you already have something on to move up a stop and unwind a little, and then above there, next target. If it really can get a move on, I'd be watching that weekly rotation zone. My next major target would be about 221.50 to about 229, right in here. That's what I'd be focusing on, because that would take it out of the oversold. So you still got weekly cycles going up. You got daily cycles pinned at the top. So I wouldn't be surprised to see some kind of minor pullback, and as long as that pullback, you don't get that close below this base, it's still fine from the bullish side. It has to get out of this little cycle top, and we're getting a little to oversold. So that's why I keep an eye. I would not be surprised at a pullback, but you don't want the pullback below that base. All right. Not seeing much else today, at least. We'll just peek up. Again, we'll just Apple. See Apple, we're on that weekly. Could Apple easily return now to, it's hit that 50% off this little sell-off on the bigger, from the bigger down move? Could it easily return to about 156? Yes, before another potential rollover play in Apple. And by the way, this was not a double. Remember, I said to keep an eye on your mega caps, and by the way, this did double in Microsoft did trigger. First target would reconnect it with the 50 exponential, so I'm still watching even on a pullback move. Cycles are at the top, so I wouldn't be surprised to see a slight pause or pullback, but weekly are at the bottom, and it reconnected with the weekly rotation zone, but wouldn't be surprised if after a pullback, if we got another push higher in Microsoft back to complete the double targets. Where do I like to put your stop now in the Apple weekly double top? Now let's hit the first target. Let me get back to Apple. The stop for the weekly, you're going to have, I would keep it above 162. Why that? Because that's the 62.5 of this down move. Because why? If it closes above here, and that's on a closing basis. Why? Because if it closes above there, then what does it statistically favor? A return to this high area. Would I I would be shocked if that happened, but anything can. You always have to do your risk management first. And a lot of times on these bigger double patterns, it can take, it went down for a series of weeks. Now it can rally for a couple of weeks before the next extended rollover play. Good. See, you got it down, Jake. Who needs me anymore? Sure, I'll take a look at a couple of those, and then I'll wrap it up early. OAS. How do you as well, Jake. I hope everybody has a fantastic Memorial Day weekend. And again, thanks to everybody who has served this country very well. We appreciate your service, whether it's in the past or you're currently serving, and you happen to be tuning into the best technical analysis channel. Here's exactly how I play it, Raj. How do I play fresh breakouts? Well, if you're in off the breakout pattern, I like to come to the candle bodies. You know that. Longer term viewers should know that. Then we use the reverse harmonics. I like to use the reverse harmonics, and this is a stop raise. Okay, because you're going to come in, your initial stop was obviously lower than the breakout, but this is where I start, as it approaches here, start raising up the stop. Okay, oil is getting a little, it needs to really continue, crude needs to continue its pattern. Stuff is getting a little overbought, so would not be surprised to see a slight pause. So you don't want to crowd your stop on these, but this is definitely an area I like to raise a stop, and then you can either raise it again at 166.37, take something off the table, and then for the longer term stuff, again, let's just see. I mean, this has, look at this. This definitely has room to run. Boy, this thing could really, even with pullbacks. Here's your next key levels. Look, there's your cluster. So that's the next cluster area. And this is where I'm using the longer and the reverse. So between 166.37, 168.38, I'd definitely be taking something off. That's the way I like to play it. And then possibly on 178.28 for then a more removal or really aggressively moving up the stops. And remember, if you're trying to stick with this longer term, if you're trying to stick with some of these moves longer term, you can, the key area, I just key as this ratchets up, and this would be for my longer term position, not if I'm doing something short term, but my longer term position, I've definitely got to keep my stop below this area. Because even on pullbacks, even if it pulls back a little bit below this area, you don't want to crowd a stop in here, because with the rising daily or something else, you want to keep that in play. So that's how I like to set up my levels. What else we have? FANG. Pretty much your same thing here. And this is what I was, we were talking about, why we use our levels, because it gives us a roadmap then, instead of just going, what do we do? What do we do? So we already have the plan in place. So this would already be a stop raise from the breakout play. Again, you're going to use your same retracements, and as it keeps running up, and even, see, this could, even if it gets a bigger pullback, you still have the rising rotation zone, so you got to keep it below this area for a longer term play. If you're just playing for a very short term breakout, then yes, you're going to use a more aggressive stop. But for a longer term breakout play, because again, look at this, just from a, is this P to E really good? Yeah. Can this run easily higher? Yeah. So I'm going to give things like this extra room. But now I got my levels. I have my longer term levels. And why is that so important? Because a lot of people don't know how to do these kinds of levels. So where do you put your levels? If it's look, you have no other price action on this chart. You've exceeded the last major swing highs from 18. How do you come up with your levels? Well, people just go, I'll just use a round number or something. I like to use the harmonics because you generally get pauses or stops there. You are welcome. You are welcome, Raj. And there'll be great oil plays as long as oil stays at these elevated levels. You'll get pullbacks. I mean, there's decent pullbacks in these, but that's why you got to keep your stop at if you're in it for the longer term. You got to keep your stop at a sane level and don't overcrowd it, and then use the pullbacks to watch for reentry patterns. Or if you've unwound, let's say that you get something off at some of these harmonics, and then you get that pullback. Well, let's say I'm just going to throw out a number. Let's say you're going to position size appropriately. Well, let's say you're long and you pull off 100 shares at 155, or let's say you're long 100, you pull off 50 shares at 155. I'm just using round numbers and that's a harmonic. Then let's say you get a little pullback back to 146, and it rotates back up. It could be a re-add. And then you unwind again, you're back to your 100 shares. You take the 50 off at 158. Or you move up the stop at 158, and then we'll get to 168, you take off those 50 shares, and you're still leaving something on for the bigger run. Have a great weekend. Oh, Wavy. Have a happy long weekend. You are welcome, everyone. Yes, George, enjoy the long weekends. We always need you on the bus. How long do I see this rally lasting? It could easily go through next week. And then I'll reassess. Remember, we're still in tactical trading mode. And also keep in mind the Fed meeting. I see it petering out before the Fed meeting. And the Fed meeting is on the 15th of June. So I definitely see it petering out before the Fed meeting. With that, I am going to call it a day. Thank you, everyone, for being here. And I will see everybody who can join Sunday. If you can't join live because you have other plans, completely understood, then just watch the recording, and I will talk to everyone later. Bye for now.